because I just started recording. Like I said, for every valid high or for every strong high or a strong low, there must be what? A valid sweep of liquidity. And then what I said, its liquidity is like a fake break of structure to the downside. So let's say this is a fake break of structure to the downside, and then the actual move will be to the what? Upside. So in this scenario, we said that price swept this low, as you can see. So this is what? A sweep of liquidity. So this sweep of liquidity are in two ways, or let me say three ways. We have the sweep of a high, we have sweep of the wicks, and then we'll have what? Sweep of double tops or what? Double bottoms. Are you getting me? So let me just explain what I'm saying. So this should be the sweep of a low, and then sweep of a double top or double bottom. Let me start with double bottom. So sweep of a double bottom, let's say you have several lows here. The market will come and then sweep all of them. Are you getting me? The
Yeah, I'm
market
getting
will
you.
come and sweep all of them, and then the actual move will be to the upside. So this is an example of sweep of what? Double lows. And then the next one we have is what? The sweep of wicks. A sweep of wicks is also powerful sweep, because now let's say market is forming wicks of candles there. You all know what wicks are. So let's say market is forming wicks. The market now come back and then take out the wicks and then do what? Break to the upside. So now these are what? Examples of valid sweep of liquidity. Are you getting me?
Yeah, I'm getting you now.
So these are examples of what? Valid sweep of liquidity. So let me just label them one by one. So now, like I said, this one is sweep of a high and sweep of a low. Sorry, sweep of a low. Then the next one will have what? Sweep of double bottom. Sweep of double bottom, and then the other one will have what? Sweep of wicks. Sweep of wicks. So in this scenario now, these are the main or valid sweeps of liquidity we have in the market. Hope you guys are getting me. Um, Yusuf, see, I told you the time we'll have session, and now you're coming late. Why did you come late?
I'm sorry.
Huh?
I'm sorry. I'm sorry. I was doing so.
Okay, it's fine. Okay, hope you're getting me clearly.
Yes, I'm here.
Okay, so just be attentive and then expand your mind to ask questions. So now these are the three major valid sweeps we have in the market. So now, in this case now, like I said, we're going to be talking about structure and liquidity today. So now, these automatically are what? Our strong low, because now the lows have what? A valid sweep of liquidity. So let's say we're using this other one for example. So this is an example of a valid sweep of liquidity. So automatically this is what? Our strong low. So expect price to later come back to this zone and do what? Start to buy from this zone. But another thing now we need as confirmation on this is what? A liquidity or what? An inducement. Are you getting me? So an a liquidity or an inducement is a valid pullback after the sweep of liquidity. So let me say it again. A liquidity or an inducement is a valid pullback after the sweep of liquidity. So fine, we've gotten a sweep here, but we need people to be liquidated for us to trigger our entry. Are you getting me? We need people to be liquidated for our entry now to trigger. So now market now will tend to like induce people. Inducement means market forcing some people to buy or sell at a particular zone. So now market will create a kind of what? An induced order block. Are you getting me? Or a liquidity. So this liquidity now is a valid pullback after the sweep. So this is our sweep now. So market will come and do what? Create a manipulation or an inducement or liquidity, whatever it is being called. But hope you understand what I'm saying. So after market now we create
Yeah.
the liquidity or inducement, it will not break to the upside. forming something like this. So those that trade other block now, mostly their entry will be on this what zone, on this inducement zone or liquidity zone. So now most times what market will do is what come to this zone, react. Sometimes it will not react, but sometimes it will react also and tend to go to the upside and then come back now, take out their stop losses and then trigger on our buy entry and then what continue the move to the upside. That's why I see some people now, they do complain, oh, I got the direction, but market now hits my stop loss before going to my direction. Those people have been used as what? Liquidity to the market. Are you getting me? So now you just need to take note now. After a sweep, after a valid sweep of liquidity, there must also be what? A valid inducement. Are you guys getting it? So now for you guys now that have not perfected this model well, I will tell you guys for free that you should focus on what the 45-minute time frame and above. Are you getting me? For you to see what
Yeah.
a clear structure. If you go to the 15 minutes or 5 minutes or 30 minutes, you see that the structure there are noisy. Like you see so many pullbacks in the market, and those some of those stuff you're marking as pullbacks, they are like a compartment of candles on the 1 hour time frame. So that's why you need to be careful why you're marking out like your entry models on the lower time frame. Because now if you go you can see a sweep, you can see a valid strong low on the 30-minute time frame. But if you go on the 1 hour time frame, that's your strong low is an engine on the 1 hour time frame. Hope you guys are getting like the reasons I'm giving you guys. That
Yeah,
your
yeah.
valid sweep on the 30-minute time frame might be your engagement on the 1 hour time frame. That's why I'm telling you guys now that you should focus more on the what 45-minute and 1 hour time frame for you to have what a clearer view about the market structure. So that's it. So like I was saying now, after a market we create a strong low and inducement will follow and then it go to the upside. So what do you expect market to do? Market should come back to what take out these inducements and then react, give a buy reaction to the upside. So this is it, guys. And most times, if the market gives a week-to-week sweep, that means if it is a week-to-week sweep, I will tell you to enter on what your inducement, because most times market will just come and then tap on your inducement, like it will give a double bottom on the inducement and then react to the upside. If you check out, that's why you see most of my charts, I do enter on the inducement. Because most times, if it is a week-to-week sweep, I'll be very careful now to enter on the inducement because I've seen in most cases, markets will just tap on the inducement and then give a very sharp sniper entry and then start to react from that zone. So now, putting all this stuff I've set together, so let me just map out the structure. So like I said, now firstly, a valid sweep, an inducement, and then a break of structure to the upside. So what I was saying here, so this is what I mean. Firstly, what? A sweep, an inducement, and then what? A break of structure to the upside. So this is what our entry model, also known as the QMR model. So sweep, guys, our inducement, and then this is our break of structure. So now this entry model will have both the type A and what's the type B, or we'll have the A plus and the B plus. So now let me just map out the B plus now, and then you guys should check out the difference between the A plus and the B plus. So basically, this is the A plus model. So this is the B plus model, the B plus entry model. So this is our engagement or liquidity. And then this is our sweep. And then this is the break of structure here. So guys, you guys should unmute yourself. Then what's the difference between this A plus now? This is the A plus now. The first one is the A plus. The first one highlighted in blue is the A plus. And then this other one highlighted in red is the B plus. So what's the difference between the A plus and the B plus?
The A plus has a break of structure and price it changes back. then created a liquidity. Then
Okay,
the B plus, it broke structure. But it already created a liquidity before it broke the structure on the B
okay,
plus setup.
okay.
Yeah.
So Yusuf, what's the difference between the A plus and the B plus?
The A plus has a double break of structure to the upside, while the B plus has a only one break of structure,
Let me show you something.
and there was
Yes.
inducement before the break of structure.
Let me show you something. Just hold. For you not to be confused, Yusuf. I just want to withdraw this for you. So now tell me the difference between the A plus and the B plus. Yusuf, are you there? Tell me the difference
Yes,
between the A plus and the B plus now.
the A plus, there's a break of structure, then inducements,
Mm-hmm.
while the B plus, there's a inducement before the break of structure.
Yeah. So you guys got it. That's the difference between what the A plus and the B plus now. The A plus now breaks structure first before forming an inducement, while the B plus now forms an inducement before what breaking structure. So now this one now has more high probability of playing out the A plus compared to what the B plus. Are you guys getting me now? So now this one marked in blue zone it has more probability of playing out compared to the one marked in what the red zone. So that's the difference between what the A plus model and the B plus model. And for you guys now, you guys should focus on the A plus first because now this one has more high probability of playing out compared to this one. So while you're looking for your entry models or your entry now, focus on this other one first. If it forms this other one, you can also mark it out and then check how price will react. But if you want to take entries, focus more on what the B and the A plus, sorry. Are you guys getting me?
Yeah.
Okay,
Yeah,
thank you. So another model that I trade these and then, like I said, we have three types of sweep. But in this other zone, market is just going to form what? A sweep of double lows, double tops or double bottoms, like I said. So after market to sweep this double bottom, sorry, market to create an inducement. As soon as market breaks the high of these inducements, market will come back and then I'll place my entry on the inducement. Market will come back, take out the inducement, and then head forwards the high. So let me just show you something. Let's say now this is the high. So what you're just going to note is the high that created this low. So now this is our double bottom. So now you see that where market swept from, now, there is always a high that leads to that low. So now why do we need that high that leads to the low? That's where we're going to take profits. So now after market creates an inducement, and then after it breaks the high of the inducement, market will always come back. Most times it will come back, take out the inducement, and then it will head for what? This other high here. So now this is what our external liquidity. And then this is what our internal liquidity. The inducement is called the internal liquidity, which is something like this. So take note. So here will be our entry. Our entry should be on the inducement. Then our stop loss just what? Below the protected low. And then I'll take profit on what? The external liquidity, like market forming something like this. I know most of you here must have seen, like most times I post about this stuff. So you guys can see. Now I can say this one works very quickly that when market triggers this, the reaction to this upside here is very faster compared to what this normal QMR. Are you guys getting me? If you can check most
Yeah.
trades I post about this very model, you see that the TP hits more faster compared to what this QMR. Are you getting me? In most cases. So take note, after market gives a sweep, but the sweep must be at least two lows, at least two lows. So now most times the low will be here and then it will form internal lows. The market will come and sweep all of them, create an inducement. After market breaks the high of the inducement, the market will come back now, take out the inducement and head forwards the external. So these are the two entry models I trade. The QMRO and then what? These were the internal and an external sweep. Are you guys getting me? So now I'll tell you guys like stick to these models. There's no need of jumping from one model to another. No, stick to this one now and then master it. Are you guys getting me? Stick to it and then master it. So now I've explained the buy QMRO and then what? The buy for this internal and external sweep. Then for the sell now, same thing also applicable, but it is the reverse. So let me just reverse this stuff, invert it, sorry. So now, like I said, now for this model now, there should, in the sell scenario, there should be what? A sweep of what? Internal lows, which is from something like a double high. Sorry, there must be a sweep of what? Internal highs, which is forming something like a double high. So after market sweeps all of them to the upside, market will create what? An inducement, which is something like this. After market breaks the low that leads to the high of the inducement, market will later come back now, take out the inducement, and then head forwards the external liquidity, forming something like this. And then same thing applicable on the QMRO. So firstly, what I said now is that we must have what? A valid sweep. Kelechi, they knock door, open door for her. Bishop. So after a valid sweep now, there must be what? A valid engagement. So I try to explain the difference between the A plus model and then the B plus. So you can see now, this is the B plus entry model, and then this is what the A plus entry model. So you guys now also noted the difference, and then I also explained the model to you guys. So now for the sell scenario, market must have a valid sweep to the upside, form an engagement. So now for the A plus, now market will break current structure first and then form the engagements. And then we'll have a final break of structure. So we'll later expect market to like come back now, take out our engagement and then dump to the downside. And then same thing applicable here. Market will like come take out like the engagement and then dump to the downside. So this is for the sell scenario. So now so far so good. I'm just going to be giving you guys the chart examples on how this model works, and then let's see how markets reacted from our entry points. So I think there is one trade I posted on the channel. Okay, all right. Up to hope everyone is seeing my screen. Up to hope everyone is seeing my screen.
Yes,
I can see it.
yes.
Okay, so is this an example of an A plus model? Okay, wait, let me just map out the structure for you guys. So you guys can see we had a sweep here. We had a sweep. What's next? Break to the upside, an engagement, and then a final break to the upside. So let me just drag this out. So let me just drag this out. We just have how many minutes left? We just have just 9 minutes left. So let me just map this out. This is a valid sweep. And then this is what? An engagement. So finally, what do we have? What do we need again, guys? A break of structure to the upside. So now, is this an example of an A plus model or a B plus model? I need a close answer here.
A plus
A
model.
plus model.
So it is an example of an A plus model. So you guys can see when market tagged on our entry, what do you see? A nice reaction to the upside, as you can see. The market tagged in and did what? A nice reaction to the upside. And mind you, this is on the 1 hour time frame. I spotted this entry on the 1 hour time frame. So you guys can see how clean the structure is. You can see how clean the structure is on the 1 hour time frame compared to the 30 minutes. So let me show you guys the 30-minute time frame. You see that there's a lot of noise on the structure in the 30-minute time frame compared to the 1 hour time frame. So this is the 30-minute time frame, and then check out the 1 hour time frame. Now you guys can note the difference. Now the structure is more clear now on the what 1 hour time frame, as you can see. So you guys can see how market tapped in our entry zone and then reacted to the upside immediately. And then our TP should be around the high, the recent high, either here or here. But for those that only do 1:3, the 1:3 has hit since. The 1:3 should be around this zone. Yeah, this is 1:3. Then you guys can see it was very quick for those that do 1:3. But for those that can hold, it should give you 1:6. Yeah, for those that can hold, it'll give you 1:6. So this is an example of what an A plus QMR entry model. So let me show you guys an example of the B plus. So I think OP, yeah, OP formed that stuff. So now this is an example of the B plus model, guys. So let me just give a valid explanation. But before then, let me just map out the structure first for you guys. So it is also good to map out the structure first and then drag it out to see how the structure is being formed before like you can go on to like place an entry. So most times that is what I do. So let's see. This was what a sweep. What next, guys? An inducement. So you guys can see how the inducement was created before was the break of structure to the upside. And then what next happened? Market came out like to take out the inducement and then expansion. So let me just take this out and then so you guys can see how clean the structure is. So let me just map it out, guys. So this is what a valid sweep. What next? Market created the inducement first before what the final break. Before what the final break to the upside. So this should be our supposed entry, guy, on inducement, and then our stop loss just what below the strong low, and then for those at TP now at 1:3, 1:3 around here. But for those that can hold to the high, can hold your trade up here, then it gave 8 weeks to reward. Yeah, 8 weeks to reward. So this is an example of what the B plus entry model. And then another thing you guys need to note is that you need to apply these entry models on your trend. You shouldn't be looking for a sell QMR model in a bullish market or in a buy market. Are you guys getting me? So you guys can see now, currently the odds are bullish. Odds are bullish because you guys can see consecutive breaks of structure to the upside, upside, upside. So market was breaking structure to the upside, to the upside, to the upside. So in a case like this, you're looking for what your buys. So maybe I think our next session should be on what trend, especially on trend and then trend. Yeah, our next structure should be on trend purely. So now in tonight's session, I'm just explaining about this QMR and then trying to like show you guys the example. So you guys can see now, this is the structure on was this OP setup. And then for the other model I showed you guys, and I think that's not formed on a, yeah. So this is it. So you guys can see what happened, guys. You guys can see what happened. So you guys can see that we had what? The first low here. You guys can see first low, second low, third low. Market came and then took out all of them. After market took out all of them, market created an inducement. After market breaks this high of the inducement, market later came back now, took out the inducement and then did what? Head for what? The external liquidity. So where is our external liquidity? It is here. Simply being that this is the high that created this low here. So this is the high that created this low here. So that's why we did TP as this was external liquidity. So our entry should be on what? The inducement. Just wait, let me drag out the structure so that you guys can see how the structure looked like. So this is the structure here, guys. And then this is our sweep. So you guys can see markets. So this first sweep here, this was the first low, second low, and then third low. Like I said, it should be at least 2 lows. So here was what? 3 lows. That means it is valid. The market came and then took out all of them, created an inducement here, and then broke structure to the upside, which is the high of the inducement, came back now to take out the inducement, and then we need to like head towards the external liquidity. So now our inducement should be our supposed entry, and then stop loss just below what? The strong low, and then our take